Welcome to the Sellernomics podcast, where we share valuable tips and information in the Amazon and e-commerce space. Each week, we deliver the best interviews with some of the top Amazon personalities in the industry to help you grow your business. Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at getida.com/Sellernomics. And now, here are your hosts, Rob Stanley and Lisa Kinski.
Hey, everybody. Welcome to another episode of Sellernomics podcast. I got, of course, my amazing host with me, Lisa Kinski, and I'm Rob Stanley, and we have great guests today. This is a really fun one. I've been through this a couple times. My wife's going through this. We're going to be talking about how to prepare your Amazon business for exit, and we're going to be talking with Gail Barzilay from Boosst, and we're going to bring her into the studio. Let's get her in here. Hey, how are you?
Hey, Gal.
Hello. Good to be here. Good to see your faces.
See you.
I know.
This is a great subject. This is a great subject because we're talking about, like, this is a big moment. Like, if people haven't exited from their first business or their first Amazon business, I mean, this is kind of a big thing. This could change their lives. So we definitely want to talk about it because I think preparing could add a lot of extra to your bottom line. It could definitely make the difference of your multiple and prep wise. So let's kick it off, though. Just let's start with some tips on what things have you seen work. I mean, there's probably hundreds of things, but give the kind of top few that you see that people should be doing to prep for selling to business. And what's a few things that you see that they either forget or they don't want to do or want to deal with? Take it away.
I think the first thing is to decide you want to sell your business. You know, from the decision, a lot of things can happen, but I think a lot of business owners taking this decision for a lot of time. Like, they have partners, they have founders with them, maybe they have employees to consider. But the first thing is to understand that you want to sell your business. Then you can start to do a lot of things, and I'll explain some tips and things that I saw going well with some of the sellers that we communicate with. So if you understand you want to sell your business, I think the next step is to understand how much it's worth. And people can say it's an art, people can say it's in science. I heard a lot of things from investor brokers in the industry, experts about valuations, and we will talk about valuation later. We can deep dive into what is the valuation and what's the multiple in the industry. But to understand how much your business is worth is the first step. And to do that, you need to understand your financials. How much your business is currently doing, what's the last 12 months of sales and profit that your business is did in the last few months. And then when you understand how much your business is worth, you can talk with an expert. You can do it by yourself. You can do it with a software. You have multiple solutions. Then you can decide what's the time frame to sell your business. So if you understand you want to sell, you understand how much your business is worth, what's the time frame? I have business owners that want to sell in the next 3 months. I have business owners that want to sell in the next year or 2 years. And I have people that want to sell tomorrow. So it's really dependent on the process. And first thing first, understand when you want to sell, how much your business is worth, and the time frame. I think those are the three main things that you need to consider, and then actively do that. Not just like thinking about it. Like do those three things and start from there.
Yeah, definitely. Yeah. I just spoke with a gentleman earlier today for our other podcast, Prime Talk, and he was running his business and it was doing really well. But if he was looking at what he would have gotten for an exit at that moment versus continuing to run the business, he would have had to run it for another 7 years to get the payout that he received at exit. So he was like, now is the time to sell it. So he definitely had something worth selling. And, obviously as a seller, you're looking for a payout, but as a buyer, you want to buy something that's worth buying, right? So what are some of the things that buyers are looking for in an e-com or more specifically an Amazon business right now? What are they looking for? What are kind of those key attributes of an attractive business for a purchase?
So first, I think for businesses, they can understand the business. And this is also, it's a tip for the sellers as well. Make your, financial reports, business structure reports, everything ready for sale before you start interacting with a buyer. because this is what they look for. Imagine yourself, you want to buy a business, you want to know everything about the business. You want to know how long the business is in the market. You want to know about the products. You want to know about the financial metrics. You want to know everything. It's like buying a house. You want to know every little aspect of the house. You want to know every little aspect of the business as well. A lot of business owners think they're gonna, tell something about the business, and then the buyer will have a desire to buy their business. It's not working like that. Especially smart buyers, they have the cash flow, they have the money to buy a business. They will do the diligence process to understand the business, like deep dive on your business. And I think from a buyer in our market, for Amazon specifically, now when we see the aggregator become more smarter and more strategic about the business that they're looking for higher margin. They're looking for specific niche product that they can implement in other product that they already have. They're looking for the owner. Who's the owner? Can we replace the owner? For example, how long? How many hours a week a business owner working this? How many employees you have? Like, they're looking for the replacement, so they will need to understand how the owner is working. They're also looking for specific niche, and I can give you some example of our customers that I see being more successful as businesses that people like to buy. So some categories are really top rated for buyers, such as baby products, home and garden, and toys, and some are less, such as fashion, technology, smoking, drugs, and everything that related to regulation or high competition. So there is a niche that you can find your business actually really, really attractive, specifically for Amazon businesses, because as you know, when we're working in the marketplace, if I have the expertise in the operation and I can find another brand that maybe have similarity to the brands that I own, and I know how to do great PPC, and I know how to operate my Amazon business, so do this acquisition, it's seamless then to find another brand to buy from scratch, or integrate between two brands that are not really have some similarity. So I think for now we have more strategic buyers in the market that are looking for a specific niche, higher margin of the companies. But not just that, we also have new buyers in the market. So we have solo entrepreneurs, and we have buyers that are looking for the first business to buy, and they will look for businesses, maybe smaller businesses, not that high margin. Some businesses not going to be that profitable. They will look for the entrance to Amazon. So instead of just like start Amazon from scratch, when it was like 10 years ago, it's easier, and now, as you know, it's like become more harder, especially with the marketing rate. They will look for business that have some traction, that they can continue and invest their money in order to grow their business. So you can see two type of buyers in the industry, and I think this is what they're looking for.
Mm-hmm.
Very good. Yeah. So here's a question for you, because you were kind of bringing up like having the books ready and having things kind of prepped. If somebody is looking to sell tomorrow or in 3 months, right? How much time should they expect if they start working with somebody, whether it's yourself or maybe an accountant, to kind of prep everything? What kind of time are they probably looking at? Most buyers, I mean, some are going to be more prepared than others. What kind of time are they looking at to kind of get it prepped to finally get it on the market to start selling? What have you seen?
It's a great question, and I think there are some, benchmarks in terms of M&A, specifically in our industry. When we're talking about small, medium businesses, usually the process is to, as I mentioned, first understand how much your business is worth. This process can take between a week to 1 month, maybe 2 months. It's really dependent on the financial metrics and the preparation of the seller to show all these metrics before the valuation assessment. I can tell you that in our company, we do the process easily, because we connect to accounting platforms and Amazon financial reports, and we help our sellers to do this analysis without starting the process with accountant. We do the 12 months back and show the business owners how much their SDE, the seller dictionary earnings, and then we multiply it by our multiple in their industry and show it to the process. So we took a process that can take a month and set between a day and 5 days to show it to the seller. But in general, it's take, for example, for investment banker or broker, it's take up to months to understand the financial and the valuation of the business. Then when you understand how much your business is worth and you want to sell your business, you agree with the valuation, then it takes, according to benchmarks, around 3 months, to find the right buyer or start to sign NDA with a potential buyer. After you find this potential buyer and sign a contract, you starting, let's say, bidding war between our negotiation stage, and it can also take between 3 months to 6 months. It could be a long process as well, depending on the size of the business, depending on how many buyers are interested in the business as well. And then I think, like, summary it up and closing the deal, if you find a buyer, if you agree on the deal, between 1 month to 2 months due diligence process of closing the deal, and transactions of all the assets in the process. So everything I said can be between, I think, 4 months to a year. And it's really, really dependent on the business and the desire of the seller to sell. I can tell you all the process that I described, it's when the seller is ready to sell. There are many sellers that thinking of selling, and then it's taking them time even to get to the accountant and tell them, let's, get the financial ready, or let's set up a business valuation. Let's even talk with my founders and to see if they, my partners, if they desire to sell their business. So until then, I cannot tell you, until the process of let's sell the business, it's really dependent on the owner. After that, it's a process as I described.
Yeah. So it sounds like, though, from what you're describing, also having that prep kind of stuff done ahead of time, right? Mm-hmm. Talking to the accounting, make sure that you, have all your books in order. Everybody's on board to sell, that type of thing. So you got to have that all together before you kind of probably even go out there and start saying we're available to buy. You want to have it really all prepped. Let's talk a little bit. I want to shift it just slightly because there's a lot kind of going on in the market trends with M&A. It was huge. It came down evaluation wise. Now it's coming up a little bit. Why don't you talk a little bit about, where it used to be, maybe where you saw it, where it's at now, and maybe kind of also just give us a little prediction on where you think it's going to go in the next 3 to 6 months.
Let's go back to 2020 when we saw $50 billion was raised to acquire Amazon businesses. It was crazy. It was the first time I think we really saw the aggregator business model. There were aggregator before, but this time they raised a lot of capital from VC, private equity firms, and they had the money to do those acquisitions. And I think back then, 2.5 years, this is where the M&A and the e-commerce really started, and specifically in our industry in Amazon. And the multiple were really, really high because the buyers wanted to buy businesses fast, and they had a competition for their really good businesses and brands. So the multiple were around 3 to 7. Some were even 8. Some I heard some stories about even higher than that. And then I think what happened in the last 2 years, after we saw a lot of acquisition in this space with higher multiple, the market started to normalize. So as every market then had this shift and the boom of some trend or hype, the market starts to normalize itself. And now the multiple I think are more stable. So the multiple to buy an e-commerce business is between 3 to 5, sometimes even less, sometimes even high, really depend on the brand and the business. But I don't think, from my perspective of the market, I don't think we're going to see, at least for now, higher than that. Because it was a bubble. What happened in the market was a bubble. Most of those multiples are usually for businesses technology solutions, startup businesses, that the growth opportunity is so high that the multiple is higher. So a startup, for example, can get a multiple of 7 to 10 because the growth opportunity is super fast. If an investor will come and inject $20 million in a startup and the growth will be super, super high, they don't care about even the cash flow or the profit. They just want the growth. And this is why the multiple will be so high. When we're talking about e-commerce businesses, it's completely different than startups. And this is why the multiple cannot be that high, because the growth not going to be that high, because the money that we'll inject in this business also not going to be that high. Because it's, marketing, supply, it's everything that it's not really related to how startups work. So the multiple now are more stable. So this is a bit of what happened in the market and what's going to happen. And I think people in the last year started scared, I think, from this the sector of buying and selling businesses, because of the high and low multiples. Some people try to sell their businesses and wasn't really, successful process for them. It's really emotional process as well to sell your business, to sell your brand. So we saw a lot of people that, didn't get the result that they expected, or start negotiation with buyers, and then the buyers, close the deal in the end, and they start talking with many brokers, and they have a lot of promises in the market. So we saw a lot of things happen in our specific market, M&A market, and now things are more clear. I think the market is more knowledgeable. I heard a lot of people say that it's going to be harder to sell your business because you don't have a lot of aggregators now trying to buy businesses. I think it's a mistake. I think there are more buyers in the market than 2 years ago. I see them, and we support them in our company. They're different than aggregators. Some aggregators still have money to deploy, by the way. So it's not true that all the aggregators are shut down the doors. They're becoming more strategic about what they want exactly. And even if they say we stop acquisition, trust me, they're looking for it's just a way of the best match. And I totally agree with that. Like, this is their business. Like, aggregator is a business model of a big company. They want to buy, the best companies for them. And the other trend I think we're going to see that it's not going to be just Amazon. So the M&A space in the Amazon industry started, as I mentioned, 2.5 years ago. Now we see Shopify aggregators and D2C and other e-commerce, companies that looking to sell and people that looking to buy. We just now open our channel for Shopify brands as well. But those are completely different models. There are some businesses that have those two channels. They have the Amazon business, they have the Shopify business as a whole with different channels, but they have really different approach when you buy these companies. FBA is something different than how you sell on Shopify. So really different model. And we're just seeing more and more buyers in this industry, the desire to buy brands as Shopify, WooCommerce, Wix, and more other platform that not necessarily in Amazon. So I think after they will buy those brands, they maybe going to start shifting to Amazon as well. So if a business owner buy, for example, a Shopify brand, and they have a good brand and they have more money and cash flow to scale their business, then they can open a new channel for their Amazon business, their Amazon channel. Yeah, this is in short what we're gonna see in M&A.
Love it.
Yeah, definitely a lot of trends that are coming back around. So let's take a quick break, and when we come back, let's talk a little bit more about some tips on how to prepare your Amazon business for exit. Want to hear more about yourself and Boosst right after this message.
Today's episode is brought to you by GETIDA, the global leader in FBA auditing and reimbursements. Get $400 in free FBA reimbursements at getida.com/Sellernomics.
Yeah, so be sure to head on over to getida.com/Sellernomics. Get your $400 in free FBA reimbursements. We got a great one today. Gail's talking about how to prepare your Amazon business for exit. We talked a lot about kind of the market trends going on, some of the tips that you need to do. I know you were starting to touch on a little bit, but kind of where do you kind of see this headed? Where is this market sort of headed to? I loved you were touching on the fact that you were talking about the different marketplaces. Actually, I'm going to swing that back around a little bit. Do you see some of the Amazon businesses being more presentable than ones that are, say, multi-marketplaces? This is something I have seen and run into. People are thinking, okay, well, a good majority, let's say 60% of my money is coming from Amazon, but I'm still doing eBay. I still have a Shopify store. I still have Walmart, and whereas when the aggregators first came on board, they only wanted Amazon, right? So Are you starting to see a trend shift away from that a little bit and some of the ones becoming more desirable one way or another, or is it still Amazon?
I think it's really dependent of the buyer and what he's looking for. I think Amazon is different than Shopify, different than traditional business, different than a startup. It's really the desire of the business owner, because they are the one that's they're gonna replace, the business owner, or gonna continue with a partnership. Also something that we see in the market. But I think in the beginning, a lot of people say to sellers, like, have different channels, so we're going to be more attractive, that you can grow fast. You can show that your product also like can be in Shopify or outside of Amazon. It sounds really good on a paper, but it's like buyers are smart. Like, give the benefits to the buyers. Like, they can understand if the product going to be scaled as a brand or not. If the product is currently not on Shopify, it's not helpful to have a small revenue stream of Shopify to convince the buyer in order to do the acquisition. You can mention that those are potential channels for this specific brand because of some points about it. But if the buyer will desire to go to Shopify, they will invest their money to grow their business and the products on Shopify. So a lot of sellers waiting, like they're waiting for creating new channels in order to do so. But I actually saw cases that it wasn't the best case for the seller, because they keep looking for new channels to grow, and then because they weren't that successful in those channels, this is actually wasn't a great for their revenue, for the profit. It was a bad indication about their product. But it's not necessarily a bad indication about the product. It can be also about the operation, the amount of money that they invest, the amount of knowledge in the operation they have selling in different channels. It doesn't mean anything about the products. It's really, it's important to remember that, because a buyer can come with the right capital and then scale this product in Shopify. So it's a question of what the buyer is looking for. So yes, as I mentioned, we will see more buyers in the Shopify, but they will look for Shopify businesses. They will look for, some great customer database with love for the brands that they can, take to the next level, maybe to expand it to, other customers, or to take it to marketplaces such as Amazon and eBay and more. So they will look for specific Shopify brands. And for the Amazon space, if somebody looking for an Amazon FBA business, they will look for Amazon FBA business, So this is why the Amazon business, the Amazon aggregator, were so focused on the specific type. Because as you know, operation, it's hard. You need to know, how to operate on Amazon. It's different than Shopify. It's different than other, areas. So if they already have the experts to run an Amazon business, why they're going to look for other channels? So it's important to mention that where you see the growth of your business. And for example, it doesn't have to be the channel, it can also be the market. So if you have product that's selling on Amazon for the US, you can predict it's going to sell in Europe in the next years. And this is why, and show the competition. So showing the growth can be about the country. It also can be about the channel, but you don't have to show that to a buyer. You can explain that and get ready with all the reasoning why. You can show a competition analysis instead of just putting the money of a channel that maybe not going to be successful that fast. You want to sell your business, just show it in a different way. And I think this is where the expert, when you consult with the expert, this is what they're going to tell you. And this is the advantage of not selling your business by yourself and not spending so much time and effort and be alone in the process, because it can take a lot from a business owner. So I think this is the place when you can actually ask, you can actually ask an expert, what is good in my business? What I need to show? Do I need to open a channel or not? Is this something that a buyer will look for or not?
Yeah. And you spoke earlier about buyers are also looking at the level of involvement of the team. So let's say that you're an Amazon business owner and you have a really lean team, if any at all. Would you recommend that as these business owners are getting ready for sale, that they delegate these tasks? Because it's easy to run the business, and I say it's easy. It's hard to delegate, right? Learning PPC is hard, sourcing is hard, logistics is hard. But we often find these business owners who are like, nope, I've got it. I can't let go of it. I finally figured it out. So that's less desirable to a buyer then, right? Because they have this one. Is it or is it not? I mean, is it better to have somebody more in the business, or what's the perspective on that?
You mean somebody in the business or outsource it? This is the question?
Yeah, exactly. Yeah.
I think it's an advantage to show that you can outsource. I think when we see customers that show that they're not working a lot, on their business, they have some, employees that are working sometimes half time. it shows a lot about the business, because if the business owner is not the core of the business, it's attractive for acquisition, because somebody else can take the ownership, have more people, have more expert, inject the capital, and then, to scale their business. If the business owner is really important to the existence of the business, think about it, from your perspective. If you were a buyer, how it's going to affect on you on the acquisition. So I think it is, and I see a lot, specifically in our industry, Amazon FBA sellers, a lot of them, it's not their full-time, work, and some of them already outsource it for many companies, the channels. And I think it's really, really attractive to a buyer to show, to see that they're not working it as a full-time. They have already the expert and the people. Sometimes they even shift those people to the next buyer, and they have the agreement, and you have, other contracts. It show a good sign. So the owner is established their company in order to, to a point that can run by itself, and then the possibility to scale. But there are other cases when the business owners, I think it's more related to the brands. The business owner is the core of the business. Something about the business owner is attractive. And then there's multiple options. As you mentioned, Rob, there's multiple options for the acquisition. It doesn't have to be 100%, I'm taking your ownership and, you leave and take your money. It can be also some, silent partner. It also can be in an upfront mechanism when the seller is not getting all the, cash right away. There is a mechanism to keep the owner for the transition of the business. So if the seller is really important in the business, they can do it slowly in order to do, the best handshake, let's call it like that.
Awesome.
Yeah.
Very,
I
very
like
helpful.
That. All right. What I want to shift over a little more and talk a little bit about Boosst and kind of how you guys got started and everything. So why don't you, first of all, just tell everybody kind of your background and how did Boosst get started in that process of your background, and make sure you let everybody else know also what Boosst does and how you guys help all these Amazon sellers.
A lot of questions at the same time, Rob.
It is. It's one big question.
Well, we'll try to answer them one after another. So I'm the COO of the company, and a bit background is, let's start with the background about myself. I actually come from the tech industry. Before the tech industry, I was an officer for 4 years in the military in Israel, and worked with multiple teams and managed a company of 200 soldiers. And I said, no, I need something else. So I studied computer science and entrepreneurship in one of the universities in Israel. And this is when I decided I want to have a company on my own. But I still didn't do it until, recently. And meanwhile, I worked in several companies, tech companies in Israel and worldwide. And I worked as a solution engineer in a big unicorn in Israel, and helped with e-commerce brand, actually big ones such as L'Oreal and Adidas, and HP, to scale their businesses with a better user experience solution for their businesses. So I created the tech solutions for their problems in the user experience. And after that, when I met my founders and we started ideation about Boosst, my CEO, Omer, actually had his own startup in e-commerce. You worked in the SMBs, small medium businesses department at Wix, the big company, Israeli unicorn as well, for e-commerce sites. And from there, he started an e-commerce startup from conversion rate. And then we started investigating e-commerce in general. And we saw really special market, as I mentioned, the M&A. And we met a lot of buyers and sellers and brokers in the industry and interviewed them and see the problems. We see a huge gap between both of the sides. My parents actually, both of them are business owners, small business owners. They gonna retire, and I saw this problem like in my house. They're gonna retire and nobody gonna replace them. Nobody gonna buy their business. So as we do the validation, I ask them questions, and of course ask other people in the market and experts. So the e-commerce market was the first thing we just got in, but in general, it's M&A. And what we do in Boosst, it's enabling millions of people to buy and sell businesses. E-commerce is our first target market, but worldwide, there are going to be millions of business owners that will need to transfer their business. And if we, like, for example, looking from a baby boomer generation point of view, I can give you a short statistic of $10 trillion of businesses gonna handshake in the next decade. And it's a lot of businesses, some of them not gonna have the possibility to do that, and their business is just gonna shut down. If the process is not gonna be accessible and affordable to them, they're just gonna shut down. And this is why we started Boosst, to create this possibility for every business owners to sell his business, but also for the business owners to buy businesses. And I think, as we mentioned, lack of knowledge in the industry, it's here. People want to understand how to buy a business. People want to understand how to invest in a business even before acquisition. And this is what we're saying. We're bringing M&A from accessible perspective. And we're also using a lot of technology. So Omer and myself are coming from tech. We also have a CTO that they exit the last startup that he worked as a CTO, and we 3 tech people that bringing M&A from a different angle. So we're saying we can implement a lot of tools that already have and collect data in a much more efficient way to make this process accessible for millions. So if a seller comes to me and show me the information in 3 minutes process, and I can help him to understand how much their business is worth, and then continue the process easily, I did my best. If you want to sell with me or not, this is his decision to make. And let's also say about affordable. And in Boosst, we're taking 5% success fee. And I know we probably heard about different, brokers in the industry and different solutions. And I think they're taking a high fee in the specific market. And to make it accessible and affordable for every business owners, we sat down and thought about it and thought how much we need to take from those acquisitions to make the business owner feel that they actually have most of the profit for their life work. And currently, we're taking the lower fee in the market for those businesses, and we have partnership in order to do that. But for us, it's important to make it accessible. If somebody comes to me and they have millions of dollars and they want to sell, it's not really matter about the size of the business. It's a matter of the accessibility to make it for every business owners to sign up and search for the right buyer. I think this is it. If there is a question you want to ask about that, my personal background, happy to answer.
Well, I want to give a quick plug. We recorded an episode of Prime Talk, you and I, and that's going to release on May 25th. So we'll have to link that in this episode as well. Gal really goes into her background in that, and it's very interesting. Lots of I don't think they're called incubators, maybe accelerators. Very impressive background. So you guys be sure to check out that episode as well. And just for our audio listeners today, Boosst is actually spelled with 2 S's as well. So it's BOOSST. And we'll get into that when we get to the website and how to get in touch. So Gal, if you want to cover those really quick.
Sure. First of all, you can, reach out to me if somebody interested in buying and selling businesses on a personal LinkedIn and on my email, and you can see here. And our website is boostme.com with double S, as Lisa mentioned. Feel free to reach out, really LinkedIn, email, or with our website. Usually in a website, when you sign up to get a business valuation, you first get an expert call. So we have an M&A team lead that he was an Amazon seller and he worked in a big aggregator. And now when you sign up, the first call, it's somebody that actually can understand, the process and what you've been through. And then if you want to continue, to expand your business with the affiliate partners, or you really want to sell your business, as I mentioned, it's your decision. You can continue with us, but this is the first go-to when you sign up in the website. Yeah. But if you want to talk to me, you can also talk to me.
So if everybody who's listening, get that pin out, get ready to write this down. So to check out the website, it's BOOSSTME.com. If you want to reach out to Gal, it's GAL.BARZILAY@boostme.com. Don't forget the double S's there. So be sure to reach out and go check out their website, especially if you're interested in selling. I'm sure you guys, if somebody's interested in selling and they don't quite even know where to start, I'm sure you can at least help them with that. You probably have some checklists and things for them to kind of go over and get things going, and what they need to get together before they kind of come back to you and are ready to sell. Besides the first thing being, do you actually want to sell? It seems to be the first question. So That's definitely the first thing you need to decide. If you have partners, make sure you sit down with them and figure out if you guys definitely 100% want to sell. Mm-hmm. And if you do, reach out to boosst, BOOSSTME.com, and, have them help you out. Have them help you out with selling the company. So, well, that was some great information. We really appreciate you being on. And 100%. You definitely covered how to prepare your Amazon business for exit. So that it was great. You also go check out that Prime Talk episode. Of course, GETIDA Prime Talk is the official podcast of GETIDA and Sellernomics. And of course, my podcast sponsored by GETIDA. So, but thank you again for coming on. We really do appreciate you being on the Sellernomics podcast. And we'll talk to everybody on the next episode. Thank you.
Thanks for joining us this week on the Sellernomics podcast. Special thanks to our sponsor, GETIDA. Did you know that Amazon probably owes you money for FBA reimbursements? Get $400 in free FBA reimbursements at getida.com/Sellernomics. Be sure to join us again next week for more great tips on how to grow your business. And thanks again for listening.